Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, we are going to review a very good hospital company sitting at a market cap of around 15,000 crores. Now, this company operates more than 19 hospitals, 5 clinics, and also has a very unique delivery style called as the hub and spoke delivery style. So, without wasting any more time, let's quickly get into screen share mode and understand it from a technical standpoint, fundamental standpoint, and from every other angle as well. So, let's get it.
Hey guys, before we start the video, let's thank the sponsor of today's video, that is Outskill. Now, for professionals who understand how to leverage AI, will see a compounding advantage over everyone else. Now, in the world of finance, business, and operations, that advantage translates directly into more value, more efficiency, and ultimately more revenue. Now, that's why I'm recommending you to join an exclusive 2-day AI training program happening live over Saturday and Sunday, 10 a.m. to 7 p.m. IST. Now, this is normally priced at 10,000 rupees, but you can access this program for free of charge thanks to Outskill, the world's first AI focused education platform backed by leading AI founders and investors. Now, over the next 16 hours of live practical training, you will learn how to build a personal AI toolkit of 10 plus tools that deliver real productivity gains. You will master prompt engineering, you will automate workflows, analyze data without coding, create polished presentations, visuals, reports much faster. You will also learn how to develop AI agents that actually help you with decision making, and you will understand how to do the strategy as well. Now, seats are definitely limited for this and are obviously filling quickly. So, if you're committed to future proofing your skill set and maximizing your professional ROI, this is the smartest investment you can make, and it's completely free. Now, click on the link in the description to book your spot and join the WhatsApp group as well to get all the updates. And don't forget to join the session on 10 a.m. Saturday. Now, let's get back to the video.
Now, first things first, let's look at the profits of the company and see how it has grown over the last 5 years. Now, this company has been a consistent compounder, and the profits of this company has gone up from 660 crores in 2021 to almost 1,567 crores in 2025, which is obviously doubled in less than 4 years. And what about the profit? The profit has gone from 40 crores in 2021 to almost 244 crores in 2025. Also, guys, I would like to thank Grow for sponsoring our channel and making us a part of Grow Network. Because of them, I can actually come and give you some amazing content out for you guys as well. So again, a big shout out and a thank you to Grow and us being a part of Grow Network. Now, please understand, hospital businesses usually have a small inherent problem, which is they have to go and create hospitals. They have to build it. So there will be some kind of loan that they take to build these hospitals. And when you build a hospital, they also have something called as depreciation. So usually when any hospital company goes aggressive with expansion to increase the number of beds, the interest rate usually goes up or the interest allocation goes up and the depreciation also goes up, which affects your net profit. So whenever you see net profit slightly not going up very fast, you will understand that this is because they might have recently done a huge capex to increase the number of beds. Now, if you look at this hospital, this is in the children's care space. Now, what are the business segments of this hospital, right? Now, this company is into pediatrics. They have NICU, they have PICU, multi-speciality organ transplant, anything that is required for children. This hospital takes care of it. And almost 70% of the revenue comes from this industry. Then they have perinatal and women's health. Approximately 30% comes from this. They also have IVF clinics, but they don't do so well. They're growing at 70% year on year. But if you look at the revenue contribution, it is only approximately 2.6%. Now, apart from this, they have also started some new initiatives, which is called Child Development Centers and Digital Care Platforms. So all of these will be high margin products that they will be starting very soon, which will also help them as well. Now, why is this hospital chain very successful and has been growing like a consistent compounder over a long period of time? And that is because of a unique model that they operate, which is called the hub and spoke model. Now, please understand this is a small company at 15,000 crore market cap, and it is replicating the hub and spoke model that big companies are doing right now. Now, if you look at the hub and spoke model, they have approximately 940 beds in Hyderabad, 592 in Bangalore, 400 in Tamil Nadu, 424 in NCR, and 359 in Andhra Pradesh. Now, Hyderabad hubs are mature and carry a higher average revenue per occupied bed, or also known as ARPOB, than the new spokes in the city. Now, even in the hospital chain, they have a different concept where if you are having a hospital that is old, that would actually generate more revenue than new hospitals. So there is a difference called mature hospitals, and there is another type of segment called new hospitals. Now you can understand the hub and spoke model clearly on this slide. Now, as you can see here, their hub and spoke model typically has 150 to 250 beds. They have 1 to 2 hubs per metro city. And if you see outside, they have 5 to 8 spokes around that hub. They have complex cases. They refer to complex cases to the hub. So this is something that usually happens. Even when I had eye operation in Narayana Hrudayalaya, they had the hub and spoke model where I could go to the branch in Bannerghatta to only get my eyes checked and tested. But if I had to go and do the operation, I had to go to a different branch, which was quite bigger, slightly outside of Bangalore, right? So this is something that works really well because the main centers inside have low capex and higher margins, whereas the outside ones are used for bigger stuff, right? So this is where you see all of this works. If you see in Bangalore also, they're pretty much there on the outer ring road itself, and they have a lot of hubs and they have a lot of spoke. And here their hub is in Marathalli, and if you look at the spoke, they have a spoke in Hebbal, Bannerghatta, and Sarjapur. So this is very important to understand that these type of models are currently working in India right now. Now let us look at the key operating KPIs for Q1 FY26. Now the main thing about all hospitals are, Shashank, how many beds do you have and how fast are your beds growing? And beds is one. So let's say that you have 1,000 beds. Okay. Number two, how many people are occupying that beds, which is called average revenue per occupied bed. So if you have occupied there, how much revenue are you making? Then they have something called length of stay, LOS. So if I am a person that's getting admitted on a bed, how many days am I staying in that? And how much revenue am I making for the hospital? So if I look at myself, I would have an average revenue bed of 10,000 rupees and my length of stay is 5 days. So hospital is very happy that Shashank is going to give me 50,000 rupees for this length of stay. So this is what we need to understand. So if you look at this company, they have approximately 1,935 beds, and you can see here they have had zero increase in the number of beds that they have in the last 1 year. Zero beds have been added. Their occupancy rate has actually gone down from 42% to 40%, which is usually not a good sign. Their average revenue per occupied bed, in fact, has gone up from 56,000 to 63,000, almost 13%. So they're not increased the number of beds because they still have a lot of capacity, because their occupancy rate is actually only 40%. So out of the 1,900 bed, their average occupancy is only less than half. But the amount of money that they're making from this less than half people is slightly more. So that is why they're getting happy. Their average length of stay is around 2.5, 2.6 itself. So that is pretty much okay. Number of deliveries. So the number of deliveries from Q1 FY25 to Q1 FY26 has actually gone down in a very small number as well, right? Now, if you see the next slide, you will see the difference between mature hospitals and new hospitals. And as I said, this is very important for you to learn, because you can see that in new hospitals, the average occupancy rate has actually gone up because they're new. The ARBOB has also gone up a little bit. The A loss has also gone up a little bit, right? So these are some important stats to also look at. Now coming to their expansion plans, because this is where the game is mainly there. If you look at this slide, you will see that in Telangana, they have 1,000 beds and they're not planning to expand over and above this 1,000 beds for the next 3 years. That means they know that the capacity for this place is perfectly fine. Coming to Bangalore, they have 442 beds right now, and they're planning to expand in this year itself 60 in Hennur and approximately 90 in Electronic City. So almost 150 beds are going to be added this year. In Coimbatore, they'll be adding another 130 beds next year. And in NCR Delhi region in 2027-28, they will be adding almost 400 or 500, 400 beds, which is quite aggressive, right? And the total beds will go from 2,000 beds today to 2,800 over the next 3 years. Now, as you can see very clearly, this is not very aggressive. So let's not say that this is amazing and great. It is not very aggressive. It is quite cautious. But that's also because when you do an aggressive expansion like this, your debt to equity ratio becomes a problem and your company's debt also increases a lot. And as I told you, if your loan increases, your interest increases, your depreciation increases, your profit usually gets affected. So that is basically the main problem. Now, if we just quickly look at the balance sheet and understand how the reserves and borrowings are actually moving from the last 5 years, we can see a very clear trend, because in 2021, they had a reserve of 391 crores, but their borrowings or loan was approximately 529 crores, which was much more than their reserves. But today, you will see that the reserves have gone from 391 crores to 1,367 crores, which is almost 4 times. And their borrowings, which was 500 crores, has now gone only to 764 crores. So right now, they have almost 2 times more reserves than their borrowings. Now, what does this also indicate? This also tells me that now they have the opportunity to expand more aggressively, and this is something that can be seen if the demand actually goes up. Now, one very funny thing about this business, which a lot of people would not associate a children's hospital, is that even this business is actually a seasonal business. And let me show you that with data. So from what we can see, if I deep dive into the quarterly data, we are actually noticing that September is usually their peak seasons, or September revenue is usually very good. So that means the months just leading up to September is where they book the most amount of profits. And if you look at the March, April, May, June quarter, it is not very good. That basically means that a lot of people are producing babies towards the month of September and towards December, and that is where most of the babies are being born, or most of the deliveries are happening right now. That means the babies are being conceived towards Jan, Feb, March, which is usually also coinciding with the marriage system in our country, where a lot of people get married between December, Jan, Feb, and usually on anniversaries, people are having fun, right? And that is clearly witnessed in this hospital as well, because the delivery chain is also looking in the same way. Now, coming to the last two sections, one is the valuation section and one is the antithesis section. Now, if I look at the valuation segment, currently it is trading at a EV EBITDA of 28.6, which I would say right now is slightly on the higher end from a valuation standpoint, because even your Apollo hospitals is sitting at 32, 33 EV EBITDA, right? So if I had to say take the same amount of risk with an Apollo hospital or a Rainbow clinic, it would be a slightly different problem that I would be facing, right? So that is one thing that you need to look at. Now, second antithesis to this entire story is that one thing that I'm not happy is that their occupancy rate is not going up. In fact, it is going down. So that is definitely not a good thing. Second, they have a heavy dependence in metro cities. Now, why is that a bad thing also? Because in metro cities, a lot of other competitors are also there for delivery houses, right? So if I want to do a delivery, there is Apollo, there is all other companies that are there in the hospital space as well. Another problem is that they're also heavily dependent on South India. As you can see, they're in Hyderabad, Andhra Pradesh, basically. They're there in Tamil Nadu and they are there in Bangalore. So they have not expanded toward the northern region, and they're only sitting in tier 1 metro areas. And their growth rate, from what we see, are also quite slow. Medical tourism has also been very volatile. That has also fallen down. Seasonality is something that we're seeing a lot swing into their length of stay and also their RBOB. So that is also becoming a problem. And finally, there is also execution risk, because in the past, they had delayed one of their hospitals, which delayed their revenue actually getting booked as well. So there are some risks to it. As I would say, this is not a completely risk-free company, but definitely from a long-term standpoint, from a consistent compounder standpoint, they have never given a bad year yet. And that is what we're looking at and evaluating from this. Again, this video is only for you to learn, only for you to understand and see how different companies are there. I will be making more such videos like this. So I hope you guys enjoyed this, and I hope you guys like this. Also, guys, I need to thank our sponsor again for today, which is Grow Network. They have been very instrumental in our growth and also helping us succeed as a company as well, right? So if you want to know more about investing, do check out the link of Grow in the description below. And guys, if you love this video and you like this video, then just click on the like button and click on the subscribe button as well. And this is something I would really love. This is me, Shashank Udupa, signing off, guys. Take care. See you guys. Bye-bye.